Hello, this is Prof Congdon, Chair of the Institute of International Monetary Research at the University of Buckingham. I'm no longer wearing spectacles because I've just had cataract surgery, if you wonder about that, but let me move on to more important matters. The purpose of these videos, this one is being given towards the end, I suppose, of February 2024, is to give some information about global money and banking trends because of their impact on the world's economies, particularly the 6 main economies that we look at. But sometimes I go a bit off-piste and I talk about things that I think are relevant to that subject, but maybe quite a long way from it apparently. Anyway, today I want to talk about two very different subjects. One is the American money scene, money growth in the United States of America. And the second is what's happening in the Ukraine war. On the first subject, the theme in recent years has been the great surge of money growth in 2021, the correct forecasts of rising inflation. Then from early 22, the collapse in money growth, inflation then come down in the context of a weakening economy. Now, that is, or may be changing. We've just had some figures indicating a more or less 1% growth rate of money in December. Obviously that annualized the growth rate up at over 12%, but if you look at the last 3 months, there has been a renewed growth of money in the USA, and I just want to focus on that for the first 5-10 minutes of this video. Now, this is something of a surprise because, let's be clear, there's been a big rise in interest rates to deal with inflation, and most of that, well, all that interest rate rise is still there, more or less. Bond yields have come back a bit, so the question is, why has this blip up in money growth occurred? In the long run, let's just be clear, there's a link between the growth of money and the growth of normal GDP, and therefore between the growth of money and inflation. It's very clear from the various bits of data we have that this blip upwards in money growth in December is the result of monetary financing of the budget deficit. It is not the result of increased bank lending to the private sector. Just get that kind of picture of the banking system balance sheet in front of us. On the one side, there's the deposits, liabilities. On the other, there's assets. The deposits are money. The growth of money depends upon the growth of assets. And the assets are claims on either the government and the public sector or claims on the private sector, mostly in the form of bank loans. Generally, banks prefer assets that are loans to the private sector because that's where they make their profits. Anyway, in December, when we had this blip up in money growth, it wasn't lending to the private sector that was responsible. Instead, it was the banks, various kinds, acquiring claims on the state. The background here, of course, the US federal government is running a large deficit, and the monetary financing the deficit is then the consequence of that, the need to finance this huge deficit. In broad terms, a US nominal GDP at the moment is over $27 trillion, $27,000 billion at an annual rate. The budget deficit, federal deficit, is something of the order of $2,000 billion, $2,500 billion to $2.5 trillion. And what happened in December was that the bank's claims on the US government rose sharply. And so deposits, which had been pretty much flat through 2023 until the last couple of 3 months, picked up a bit just in the last few months of the year. But there's another aspect to this which I want to highlight. In the USA, people can have their money in the form of bank deposits, Well, then there's the alternative of money market mutual funds. As far as I'm concerned, these funds are really money because they can be accessed very quickly and used in spending, so they're really money. And they're certainly part of the M3 measure of broad money that I look at. At the moment, the total balance sheet size of all the funds is getting on for $6 trillion. The growth of these money market mutual funds in 2023 was phenomenal, at around about typically 20%. You look at the different, it varies from month to month, of course, but about 20% in the year as a whole. And if you look at this chart here, you can see the 3-month annualized change towards the end of 2023 being up at over 25% sometimes. So the growth of the money market mutual funds is running at around about, say, $1 trillion a year. And this bit of the American monetary scene is dominated by money market mutual funds that hold very short-dated US Treasuries with less than a year to maturity. So this financing via the money market mutual funds of, will vary a bit, but between, say, a quarter and a third, maybe sometimes even more than that, a quarter and a third of the US federal deficit is very important to what's happening in the economy. Okay, let's just then put all this together. It's very clear that this uptick in money growth, such as it's been, is because of the US deficit. Now, I don't know whether this is going to continue. All I would emphasize is this is a sign of the kind of result you would expect if a nation runs a budget deficit of 8, 9, 10% of GDP. This is the kind of thing that happens in South America. All right? This is not something that you would normally expect to see in the United States of America. Before I finish on this subject, and so therefore we must look at these numbers, the US federal deficit month by month, the US money numbers month by month, and we know what's going on in US politics. We know that neither Biden nor Trump is interested in these figures. And we had to worry about what happens in this particular very important part of economic management in coming years. Just a couple of things more to say here. One is that the US banks, the American banks, are not growing their loan assets. Obviously, part of the reason is high interest rates at the moment. Another reason is regulation. The banks are being subjected to more capital regulation. There's debates at the moment between the regulators and the banks, in a sense, to make it easier for the US government to finance its deficit, but it's not very good news for the availability of credit to the US private sector. Obviously, there are other ways of financing the deficit. It could be done to some extent abroad, but that doesn't seem to be what's happening at the moment. Instead, there's very much this reliance on the US domestic savings, and particularly the American banking system. And frankly, this is not healthy for the medium and long-term sustainability of an anti-inflationary monetary policy. Okay, now I now want to talk a little bit about the Ukraine and the Ukraine war. It's not my main area of expertise, of course not, but sometimes things like this matter, and they certainly matter a lot to the economic scene. There's a lot of worries about how Ukraine appears to be outnumbered in terms of people, ammunition, artillery, and all this kind of stuff. I want just to point out something that in my view is very important and may come as a surprise in coming months. It's clear from what's happened in the last 2 years that drones are a very important part of modern warfare. And the positioning, the targeting of these drones is crucial. Now, Ukraine, for all its problems, has had Western help, and it appears to have mastered the dispatch of drones with GPS positioning. Let's just be clear what's happened in the last, particularly in the last year or so, but there were some things the first year, but is that Ukraine has been able to send drones that destroy or damage oil refineries hundreds of miles into Russia, such as in places like Volgograd, old Stalingrad, and St. Petersburg. It's been able to send drones at the Kerch Bridge, which connects Crimea and most of Russia. It's also crucially been able to destroy ships. So a fifth of the Russian Black Sea fleet has been destroyed by drones, clearly with GPS positioning. The production of drones is increasing very quickly. The tempo of these destructions of the various bits of Russian infrastructure and ships and so on has increased in recent months. The Russians don't like this. So what we've had in the Russians haven't got, they can send out their drones and the bombs, dumb bombs and so on, they haven't got the GPS positioning. You know, they haven't been able in the winter of 23-24 to target the energy infrastructure that Ukraine has in the same way they did in the last winter. So what are they talking about? And you get this announcement, then being covered in the newspapers, that the Russians want to send up nuclear weapons into space, specifically to destroy satellites. The point is that the GPS positioning depends on satellites. And the Russians haven't got control. They want to get them, but they haven't got control of these satellites. I put it to you that the Russians are in trouble. Anyway, let's just watch this space in coming months. But I don't think that the really serious risks of losing this war are on the Ukrainian side. I think they're on the Russian side because of the way they've fallen behind. In fact, they never really had any real presence in these areas of military technology. In my view, they are in trouble. Anyway, we'll see what happens. Plainly, a clear outcome of the Ukraine war in 2024 will change many calculations, including economic calculations. So I just thought it was worthwhile to make this point in this presentation. Thank you.